Hi, this is Elliot Eisenberg of Graphs and Laughs, catching you up to date on the latest in residential sales data in both Hillsborough and Pasco counties. And it's, as always, a story of inventory. No matter how you slice it, inventory is well down year over year, somewhere between 25% to 50% in both Pasco and Hillsborough for single, and more so, the bigger number, for multifamily. No matter how you measure it, whether it's median time to contract, days of inventory, or the absolute level of inventory, it's really low. Yeah, it's higher than it was at its all-time low earlier in the year, back in March, April, and May, when it was at the all-time low. But let me tell you, because year-over-year numbers are much lower now, and because the hot spring season's about to start, we are going to again break all-time record lows. And for example, in Hillsborough County, single-family unit numbers will fall below 1,000 for the first time ever. There's no question, there's simply nothing out there. Now, that said, and we also know that activity has held up pretty well. This is really interesting. If you look at pending sales and actual sales, they've done remarkably well. They're essentially flat compared to a year ago. And a year ago, things were in a frenzy. It was a supercharged period of time. The fact that we can maintain that level of sales activity with inventories being lower than that since then, much lower, and prices being substantially higher, is really a strong sign that buyers are really out there. If we also look at sales price to list price, it's at 100%. This means that realtors are doing a good job of teaching buyers and sellers what's going on. This really is, no question, a seller's market. And if you look at year-over-year price appreciation, it's in the ballpark of 20%. A little more here, a little less there, but ballpark 20% across both types of properties, single and multi, and in Hillsborough and in Pasco counties. This is a strong market. If we now turn our attention to the economy at large and GDP and so on and inflation, the economy is doing well. Sure, Omicron is here, but Omicron will come and go relatively quickly. It's very contagious. It will run through our economy like it's done in South Africa, where caseloads are already declining, and it will be gone. So in Q4, which just ended, the first 2.5 months were great. The last couple of weeks, not so great because of Omicron. And the first couple of weeks of Q1, which we're in now, will be a little weaker because of Omicron. But Q4 will have turned out to be a spectacular quarter, 5.5% growth, really strong. 2022 is going to be a great year, 4% growth. And Q1 is going to be strong too. And any weakness that we see from Omicron will be pushed into the latter half of 21 first quarter, because it's going to stop us from doing the things we want to do. Go to sporting events and music and cultural events and seeing friends and going to bars and ballet and restaurants. So I don't think there's any real long-term impact in here. The thing we've got to deal with now is inflation. It is disturbingly high, there is no doubt, but fortunately the Fed's on it. I suspect that by year end, inflation will go from what it was in the latest numbers that we have for the month of November in the upper 5s, lower 6s. It'll probably fall to about 4%, partly because supply chain problems will get better and partly because the Fed's going to raise rates. They've told us they're going to end their tapering their purchases of treasuries and mortgage-backed securities by the end of March. It was going to be June, but they sped it up so that they can raise rates faster. And I think they're going to end up raising rates twice, a quarter point each time, possibly 3 times, although I think that's a bit of a stretch. That said, because the Fed's on it and the Fed's telling us they're going to raise rates if they have to keep inflation suppressed, that's going to keep interest rates down. And as a result of that, the 30-year mortgage, all important to housing, might go up by 0.5 point over the course of calendar year 22, which is a little bit, but not enough to upset the housing market. Remember, job growth is going to be strong and wage growth is also going to be good. This will be a good year for housing. That's it for now. See you next month.